Theunis, thanks so much for your time. I mean, the investors that we speak with right now are currently doing just that. A lot of them are increasing their offshore exposure, and especially after the budget has actually allowed them to invest more offshore. But talk to us about the tax implications of that.
Exactly. Most people are aware of the fact that you are taxed on your international or on your worldwide income and capital gains in South Africa. But what they're not aware of is that certain assets we call situs assets, in other words, they're situated or regarded to be situated in a certain country. If you should pass away, those assets fall in your estate, but you will be taxed in the US or in the UK or wherever those assets are that they have their situs at.
Are you talking about the house?
House, definitely with a house if it's situated in that country. But more importantly, and this is where the nuance difference is and where it becomes a problem, let's take something like a share portfolio. Your share portfolio, yes, you know the shares are traded on the US stock and on a US stock exchange, but your financial advisor actually holds it through a nominee account with a European, let's use Copenhagen as an example, nominee account. If you should pass away, that nominee account or that service provider won't even know you passed away because their agreement is with your South African service provider. Let's use Citadel as an example. They won't even know you passed away, so why is there any implication with regards to the US or anything like that? And that brought us to the point a year or two ago where we did substantial research. We got opinions from abroad, from South Africa and everywhere. And what was said is the fact that you don't have to transfer those shares or the holder doesn't have to transfer those shares or report it doesn't mean that they won't be regarded as situs assets for purposes of, for instance, US federal estate taxes. Now the problem with federal estate taxes in the US, because you're going to pay death and taxes, we know the old adage. But the problem with taxes in the USA, especially if you are a non-resident alien, is you're going to be taxed at a much higher rate than South Africa.
Do you know roughly how much?
Yes. In South Africa, just to put it in perspective, estate duty is around 20%. There's some adjustments now after the budget, but let's use 20%. In some cases up to 25%. In the US, and you've got a tax-free portion of 3.5 million rand, and furthermore, any inheritance that your wife or your spouse, and not your wife, your spouse benefits from, is tax-free. Now in the US, if you're a non-resident alien owning US situs assets, first of all, you only have $60,000 tax-free. Second of all, the inheritance of a spouse is not recognized. So you are going to be taxed. And most importantly, the tax rates are higher. There's a sliding scale starting on around from 0 to about 18%, and it goes up all the way to 40%. Now, to put that in further perspective, if you're talking about an investment portfolio of over about $236,000, including the $60,000, you will break the line of 20% and you'll pay a lot more. Of course, you have to make the necessary lodgements and so on in the US as well, and our experience is that costs about $5,000 at a time. So the point we want to make, and this is where we got to, is to warn people to be very careful. Yes, you need to invest offshore, no doubt in that, but be very careful in what kind of instrument and what kind of platform you invest in.
So which would be better instruments, or which would be better platforms to look at to avoid essentially all your money being eaten up by taxes, as you just explained?
ETFs, where the issuer is registered outside of the US, even if it's traded on a US stock exchange, and I'm using US because that's the biggest concern here. Even if it's traded on a US stock exchange, if the issuer is domiciled outside of the US, you're safe. Unit trust funds outside of the US, again, even if it make use of underlying assets in the US, you're safe. You may take it one step further. And of course, I shouldn't forget about that. Certainly insurance wrappers outside of the US, again, you are safe making use of those. And then very importantly, and this may only apply to your bigger investors and perhaps more astute investors, what we also do is we make use of US offshore companies. In other words, a company offshore to the US, out of the British Virgin Isles. In some cases, we join that up with a trust, with an offshore trust as well. So you can use those kind of structures as well domiciled outside of the US and still invest in the US without these implications.
You know, I'm surprised that a lot of the investors who do buy a whole lot of equities, specifically there in the US that are domiciled there, wouldn't know this. Or if they did, I mean, what kind of activity are you seeing regarding tax evasion here? Because the tax implications that you're talking about, it is horrible.
Yes, it is, from a estate perspective. Now, what contributes to the problem is your service providers, let's call it the holders of these nominee accounts, the providers, would tell the South African investor that this is a storm in a teacup. You don't have to worry about this because the US authorities will never find out, because when you die, we're not reporting it. Now, and that's what we warn our clients against. In the environment, in the international environment of exchange of information, CRS, the open economies and so on, there's nothing that you can actually hide anymore. So at some stage it may come out. Now let me add to the problem there. You've passed away. Your executor may not have known, your South African executor may not have known and have not reported it. And he transfers those assets. Now in terms of US law, and this is according to the advice that we got, in terms of US law, there's a lien on the estate. That means they've got a claim against the assets of that estate, even if it was transferred to a beneficiary. So the next step now is your beneficiary becomes liable for these taxes, whether they know about it or not.
Sure.
Rather not take your chances with the IRS.